Good morning, everybody, and this is your SP 500 setups for today. So again, the shorts were the right call for yesterday, but we are now starting to see some diversions on the 8-hour, and we are also at two weekly levels, which are relatively strong. And as I mentioned yesterday, it's pointless trying to think that it is going to punch through these levels. So 42.38 is big weekly level, and then you've got 42.73, which we're just hovering on at the moment. One thing to point out on the daily is we have a pretty big pin bar. It's a pin bar off structure, so obviously we need a daily close above 42.98. So I'm going to round that off to 4300. We need a daily close above that for this pin bar to have any potential of reversing to the upside. So oscillators group to the downside quite nicely, extremely oversold at the moment. So the big question here is where to next. So the other thing that you do need to draw in, there is my channel. I'm going to leave those big thick lines so it just got them in our face. So we're in a channel at the moment, could be a flag. Look at the oscillators here, off structure. That's what's identifying it as a flag. And you can see how we're toying with the top of this the channel. So the 3-hour and the 8-hour are indicating that we are at a very strong area of potential support, and we could get some kind of a break to the upside. Right now, flag target is pretty much the high of the week. So if we do break, you'd expect to move back up to there. Still in a downtrend, no debate about that, but the question at the moment is, do I really want to be risking shorts here when there is a lot of warning signs here and warning bells going off that we could be due for a bit of a bounce? We've got a pin bar off this level, and then we've got a big engulfing bar off this level. So a break of 42 or 4300, should I say, is pretty much a double bottom. But that double bottom, by the looks of things, is the next level high anyway, which would be the range target. So that is 591 points. 468, what's higher up here, 600. So it will basically be just above this level. That's what the double bottom is. So this is the double bottom here. The leg 1, leg 2, neckline there. Diversions of structure. Okay, so higher time frames is pretty clear that you need to be very careful about shorts. And the minute you get down to the 1 hour, we're still very much in a downtrend. Still flirting with this the top of the channel. Let's just call it a diagonal resistance line at the moment, or trend line. In amongst the faster moving averages right now, oscillators are grouped to the opposite sides, indicating a potential move to the downside, which is very possible. I'm just going to adjust this level ever so slightly to pick up this low of Tuesday. That was Tuesday's low. Here's Wednesday's low. And you can see we're still making series of lower highs and lower lows. So when you look at the hour, we should still be looking for an opportunity to short here for a move to the downside. But that picture could very well change here on the 15-minute, which it kind of has. So yesterday, we were looking at the same level. It didn't quite go and test it. But then if you put this level in here, and you actually would have seen this beautifully on the 5-minute. You can see the break and the 1 bar retest there to come and test this. So if I just drop across the 5-minute, you'll see what I'm talking about here. There it is there. So you can see we're just hovering on that level, drop below. And if you just waited here, below the trend line, market is open, probability of us bouncing off here is fairly high and a strong downtrend. 100 points, 110 point stop loss, and the first target would have been hit very quickly of 183 points. And then you can see we bounced back up, basically looking for the Brooks gap, as I spoke about in my Forex video yesterday, which is this tail here, and then next move down, and you can see all the way down until we hit the main levels at the bottom here. We're just a little bit short of it, but anyway, pin bar, if you look left on the 5 minutes, you more than likely would have seen a closer level that you needed to focus on. And here's another example of a double bottom. Pin bar, inside bar, more than likely off structure. There's my neckline. Solid break above the neckline. You can see there, bar closed on its high above the neckline. Pretty much entry. Stop below there for remove the upside. Anyway, we typically don't take these trades because they are against the trend. So for me today, we need to watch this very carefully because granted we drifting lower, but look at the moving averages, they have crossed over. Look at my oscillators, they have separated. I suspect we are probably looking for a break to the upside. So this little buying frenzy going into the close yesterday is a good possibility of that continuing. So what we want to be doing, this is obviously a decent amount of structure here at 42.68. Remember, that is a weekly level, and I can move it around because it's going to be somewhere between this tail and that tail there. So worst case scenario is 42.66 here. That would be first prize. If that does not materialize, then I'm looking for a break of 42.87. I'm looking for price to come back and form a base here. We're going to have a very close target of 42.98 or 42.99, 42.300. I would expect another rejection there to come back and find a base pretty much down here again, I would assume, at 42.87 before another attempt up. That is going to set up a pretty much, you can either call it a cup and handle where what we're forming now. So here's the cup and we're forming the handle, or get up to there, pull back, and again, and then we have a left shoulder, right shoulder, left shoulder, head, and then the right shoulder would form here. So we'd have a pretty big inverse head and shoulders here as well. So there are signals on the 15-minute that we're looking for a bounce. So for me today, the bigger trend is down. So whatever trade you take to the upside is going to be risky. It's not going to be set in stone that you're actually going to get a decent payday. But in my opinion, the risk is well worth the reward at the moment. Now, another thing that we can see here on the hour is a deeper pullback down to this 42.66 area, or see, I'll pick up that low there. Come and test this 42.67 area here and start turning. If you start rejecting this area, that's going to form a higher low. So then obviously, some people that are really cautious when looking for a trend reversal will say, right, that's point number one. Next point is I need a higher high, and they look for this break above 4,300 and retest, and that would signal a commitment to the longs at least until the range target up here at 43.47 or 43.50. That would also be this double bottom target as well. So that's kind of the structure we need to pay attention to on the hour. But when we're on the 15-minute, the structure is already starting to form here. So it's well worth the risk in my opinion anyway. So as soon as we get some structure either down here and we get a pin bar, inside bar, engulfing bar off 42.67 area, it's going to be well worth an attempt to break through this range, because what will happen is you've probably got a 40% probability of it playing out, but your risk to reward, so you're probably going to end up, let's just say you risk 100 points here, first attempt is going to be a break above there. You can move stop to entry and just wait. If it punches through here, that's your first take profit area, which is 290 points, so that's almost a 3-to-1 trade. Then it should pull back, find support a little bit lower down, and validate the break of the moving averages on the 15-minute, and then continue to the upside. And remember, this is exactly what a reversal pattern looks like. You can see we start going above the moving averages, moving average crossover, we're below, we're back above, we're below. So this is just the market swaying backwards and forth until somebody gets control. And lastly, the levels to the downside, we are oversold on all the higher time frames. We have massive diversions, and we also have there's a lot of noise, or not to say noise, but there's a lot of other metrics, for example, the measurements of the US bond market at the moment, which has stabilized and starting to turn. So what that's doing is that people are starting to buy stocks, they're starting to see value in stock prices, and that's going to drive the index a little bit higher. So that's kind of my view at the moment. I don't believe that this thing is setting up for a big fall. I do believe that this is really being a half decent pullback. And the other thing is, if you look at that was the downward trend we broke. We've come back, we're testing it. There's just too much going on in this area for me to be convinced that we're going to continue falling at the moment. So my bias at the moment is slightly bullish, but if we do break this level here at 42.38, we do break that to the downside and come back and test it, that's pretty much going to give us the confidence that we're starting to move further to the downside, and there are some other gaps here, daily gaps and weekly gaps that need to be closed anyway, so that would set that up. But for now, from the 15-minute, I'm reluctant to be jumping in short. I am looking for a setup that is going to break this channel to the upside, and medium-term target is pretty much going to be up here at 43.50. Obviously, we've got to get through 4300 first, and that's going to be our line in the sand. Anyway, hope that helps, and we will catch up with you tomorrow morning. Cheers for now.